Ladies and gents and ladies, I want to talk to you guys today about micro Bitcoin. All right. The big Bitcoin is a little bit too volatile for me, but I have been doing a little bit of messing around with it because I felt like the equities were trying to steal all of my money today. And so I just uh, locked my account down and I came over here. I actually did take one little Bitcoin trade, but because I am not familiar with it, never traded it before, never really even paid attention to it, I was leery about holding the trade and I ended up killing it. But it would have worked out fine because, believe it or not, Bitcoin follows the whole run on liquidity and then go somewhere else. So that's what I want to talk about today. Because we've been falling out of bed looking for a short in Bitcoin, it makes sense to me. I did not start trading it at the beginning of the day, but I wish I would have because we did fall out of bed pretty bad. I mean, we went way down. So, couple of things you need to know about micro Bitcoin. One micro for every $1,000 it moves is $100 to you for profit or loss. And so that's very tradable asset, kind of like trading crude in that respect. The bad thing about it is it can move that $1,000 relatively quickly. But it's no more volatile than NQ or even ES. I mean, we're seeing 20 point candles in ES happening very, very common. The biggest 1 minute candle I see right here at the open was this one right here, and it was 500. That's $50. $50. But my question was, I've been looking at this opening range thing. This is the very first candle of the day. And I also, another question was the volume. Do we have increased volume during the New York session for Bitcoin? And you can see down here, this is the volume bars. And if I put on extended trading, you can see the volume during the New York session is a lot more volume than during the overnight session. So that gave me a little bit of faith that yes, it does have more volume. And so we can use that opening candle as our opening range. And so I just went through here and started marking a few days to see how it performed around that. And today, very nice day, very good movement. I did not catch any of it except just one little piece. But if you look right here, that's our very first candle of the day, and we pushed up. If you look at the extended hours, I'll look at it one more time. We went up and we ran some liquidity up here. Right here, these two highs, we ran those. And then we pushed down, we came up, we made a lower high, and then we started offering back to the bottom of that 1 minute candle. And what did we do when we got there? We pulled through it with three little fair value gaps, wicked into one of them. That's a sell right there. Whether it goes your way or not, you can put the stop loss up here at the high of the day just to be cautious. And your entry is right there. That would be a $130 stop loss with a high probability you could go to break even. All you really need to do is the top of this, the top of that 1 minute candle is what they recommend on this. But sometimes it will go back to it because a lot of people take this trade. That's $64. Okay, so where did we go? Well, we had a monthly low marked right here. We went there, kind of pulled back a little bit, tried to go higher, failed. And we had another monthly low down here. And this is where I got involved. Right here, I saw this clean straight line and I thought, when we take those lows, we could go take that liquidity. And we did. And so I sold short. But after we started pushing back up right here, I was like, I don't know. I've already been beaten down by the equities. I just took my profit and got out. And it wasn't much. It was like $80. But yeah, 80 bucks is 80 bucks. But if I would have held it down here, it was 580 bucks. And I wish I would have held it. This was right at MOC when it did this, right at the very, very end of the day. But it did take that low. We have another monthly low right down here. We could be targeting, or maybe that was all it wanted, and now we go back up for a while. Don't know. But I know if you mark out that first 1 minute candle and try to take a trade off of it, you might make some money. Let's look at a couple of days, and then I'll just end the video. I'll let you go through here and mark it all out yourself. So here's that first 1 minute candle here, similar, very similar pattern to the other one. We did have a gap fill opportunity, which this is you have a 70% chance we fill the gap at least halfway. I usually will use a Fibonacci tool. I'll go from where we closed to where we opened, and that 50%, if we're going up, that's my target. Here, we only made it to 25%, showing bearishness. That says, hey, we couldn't even make it to half of the gap. And then we lower high, take that high, pull away. It's best to wait for at least 15 minutes transpires before you try to get into another directional trade after we've moved up. So the 15-minute candle, somewhere around here, we push lower, we touch that there, I go short right there immediately once we touch that. And then you can just aim for these lows right here. Or if you think we're going lower, you have a level down here marked, maybe we're going down to here, you just put your stop right above the high of these candles. So you're getting in basically at the low of that first 1 minute candle, maybe right here. And to get your stop up there, that's $63 stop. How far did we move down? If you aimed here, I think that would be, if you aimed there, that's 200 bucks roughly, $200. Not bad, and that's only on one micro. And you could add, as we come back up and fail to make a new high, you could add one. Another one here. You could add another one there. Continue to aim for that. Once we take that, don't add anymore. So, tradable asset, absolutely. So let's look at this day. We pushed down, took out the low, went back up, probably took some liquidity in pre-market, and then we started making lower highs, lower highs, lower highs. Once it gets to this point, you could actually mark out your breaker and treat it as your line in the sand. So the breaker is always the last down close candle before the run on liquidity, the highest point. So that would be a bearish breaker right there. And then we just wait for candle bodies to start closing below them. Preferably try to find a fair value gap. I like to see it push back up and fail to go any higher before getting involved in the trade. So I would get in right there, and I would just aim at least to here. If I had another level marked down here, because we've been so freaking bearish, maybe I aim all the way down to here. Like today, that weekly low, maybe that's where I would aim. So that would put us getting involved right somewhere right around this area. No, right around this area. That's 6,000 points, $600 on one micro. Not too shabby. So if the equities are being a pain in the butt, putting up 100-point candles on NQ and 25-point candles on ES, they're great if they're going your direction. They're not so great if they're going against you. Find an asset that's actually moving, because they all behave the same way. They all take highs, run liquidity, put up a really nice reversal pattern, and then they go run other liquidity. Maybe it's just here, but maybe it's all the way down here. You use the same patterns, same candle patterns that we're using in everything. This day was chop fest. When you see a day like this in the morning, where we don't really go anywhere. We don't really go anywhere. And you can identify this within the first hour of trading. We've gone above it, we've gone below it, we've gone back above it. We're just staying in a range right here. Your best bet is to come back after lunch and see if we get some movement. This happened at 1:30 New York time, about 12:30 Texas time. We finally got a move. We pushed down. We swept some liquidity, probably over here that we can't see, maybe a pre-market low or something. And then we can just use our traditional reversal pattern. Last up close candle is right there. We come down, we touch it to the tick. Let me zoom in on that so you can see it real close. We push up with a fair value gap. We come down, we touch it to the tick, and then we start ripping. That would be stay out of the morning when it looks like that. Use this 1 minute candle as your indicator. If we've gone above and then we've gone back below and above and below, maybe you tried to take a trade to go up to fill half that gap, and now you're looking for one to go down and you get in here and you get smoked. Stop, wait, come back after lunch. Okay? Look at that day. Holy cheese balls. I am just, my mouth is watering over all the money I've missed out on this Bitcoin rundown. I never even thought about jumping in there. Man, it's falling out of bed. I didn't even know if it would be tradable, to be honest. Gold to me is not tradable. It can take your money in the blink of an eye. But this is actually tradable. So here we push up, we fail to go any higher. We push up again, we fail to go any higher. We fall out of bed. Look at that move. Look at that move. My goodness. How far down will we go? I would assume we would have some sort of a weekly or monthly level mark down here, and that's what we'd be aiming for. But man, I would have gotten in right there. And just to this little setup, man, that right there is $300 on one micro. Get all the way down here, $400. Well, if you get out there, take your 300, wait. Are we pushing higher? Nope, we're not. We tried to make a new high, we failed, and now we're pulling away with a fair value gap to the downside. Maybe we get in there and we aim for whatever lower hanging fruit down here. That's another $200 on one micro. It's 500. So yeah, it is a tradable asset. Get in there, mark out all these 1 minute opening candles and just see what's up. Maybe you can identify days where you can make a lot of money. Make sure you're marking out your higher time frame levels too. If I look at that on a monthly right here, I don't know where we just were, but I would imagine those days it pushed really far down and then pulled back, we probably were taking out these monthly lows right here. I don't know if we bounced on that one or not, or maybe weekly lows. Because that weekly chart, I mean, we've just been really falling out of bed. Yeah, here we took out some weeklies, went back up. So this was probably the one where we took out a low here and then went back up. Maybe even on a daily chart, you could see it even better. But mark those lows so you know where the market might trade down to. Right now, we have these two marked, and it may trade down even lower. But I would expect it to at least take that, but I would also expect it to push up a little first. So mark all that stuff out tomorrow and just kind of see how it reacts to taking that monthly low right here. I think that's the price line right there. We took it and we pulled back just a little. So maybe on a 4-hour perspective, maybe we try to get up into this one and then start offering lower. Or maybe we take that high and start offering lower. But I'm going to mark that as a 4-hour high right there for sure. All right, that's it for me, guys. I am I'm going to leave y'all to the homework. Y'all can go in here and mark your charts up however you wish. But I would like to encourage you to, if the equities aren't doing what you want them to do, look at something else. No sense in sitting on your hands all day and waiting for something that may never happen in that volatile equities right now. If you can have a trade in another asset, like crude oil is one I've been trading quite a bit. We could look at it very, very briefly. But today it was the same way. It was behaving like the equities. See, that's its entire movement today, right there. On a smaller time frame, like a 5 minute, it was just, it was one of those days like I talked about earlier. If you mark that opening range candle, we go above and below it, above and below it. That's not a day I want to trade. Look at it in 1 minute here. It actually opens a little earlier than the open outcry. It opens at 9 a.m. New York, so 8 a.m. Texas. You'd actually have to go to extended hours to get its opening candle. But I was watching it, and it was a real nothing burger from the open. It did move a little. We could mark it out and just see what's up. Those are lows that I've got marked. We already took them. I'll get rid of them. So 8 a.m., 9 a.m. New York is right here. 9:14. That candle right there. That doji. That doji is our opening range candle. 8 o'clock. And I haven't been doing this opening range trading for very long. I'm gonna get rid of this line because it's just in the way. I haven't been doing it. I piddled around with it before when Hogue was talking about it one day, but I wasn't ever confident in it. But now that I've marked it out so many times and seen how the price behaves around it, I think it might be something I use on the regular now. So here we open, and we already go all the way till 10 o'clock, 2 hours, and we haven't done anything but just meander back and forth in this opening range. Maybe you tried to take a trade here and failed. You lost money. Don't mess with it anymore because it's probably going to be a choppy day like this. Now, was there opportunity to make some money here? Yeah. When we came down here, we actually took out a 4-hour low, maybe even a daily low. And then we did have that fair value gap. But if you got in somewhere out up here, this got you. Crude is kind of nice in that it's only a dollar for every penny it moves. So if we got in right there at the breaker and we were all the way down here, that's a $25 stop loss on one micro. So once we validate that thing, even though we're chop, 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 if we got in right where we touched it here and put our stop below the low, maybe we lose, but we only lose 25 bucks. And then once we start going that direction, you can add. We got some fair value gaps here. You can add back in, and then we just aim for the high of the day. That's the only way I would recommend trading the day like this. I would not. Once it's done this for 2 hours, don't worry about that high and the low of that candle anymore. We may react to it in some way, but I wouldn't even bother using it as a trade setup anymore. After that first hour of trading, it's really not that big of a deal anymore. We did go back up to it, kind of meandered around inside of it for a while, moved back down. But this was, in my opinion, the move of the day right there. That was a nice reversal. And so you're in here, you add. How many points is that for crude? If we just aim for the highs there, we actually took that high. So I don't know if I would have aimed for that. But if we got in right here at the breaker, $25 risk, and we aim for that high, That's $80 on one micro. Now, if you're adding in as we're pulling back and not making a new low, maybe you got 3 or 4 micros on. By the time we get up here, maybe you make a couple $100 on that trade. Uh, Even if you got in right here with two, that's only a $50 stop loss, and so that's $160 to that high. But that's only a $50 stop loss, three $75 stop loss. Aiming for that high, you got there. Now we're up to $240 on three. That's a whole lot more tradable to me than that chop fest we saw in the equities today. So I'm really going to be watching the equities to see that first push down. I didn't get in it; it didn't feel me, and I just didn't know where to get in after that. It was bouncing too much. I tried a couple of times and got stopped out, and so I was just like, well, I'm going to wait for it to find bottom. It did, and then it did that choppy, rangy crap at the bottom, and I was like, there's got to be a better day to trade this sucker besides today. I'm getting out. But yeah, that's a nice little move in crude. Okay, I'm going to end the video there. I don't want it to be too long. Um, give Bitcoin a try. Give crude a try. I would stay away from gold right now. It's too volatile. But if you have a stomach for loss and you can wait for it to take a high or a low on a 4-hour chart, you can make money with gold. But just know it's going to be one of those where you're up $100 and then maybe you're only up $2, or maybe you're down 25 and then you're up $200 and then you're down $10. It's that kind of choppy business. Usually if you have a 4-hour high or low taken, it will put up a decent reversal pattern and respect it for the most part. It does like to paint all